What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Today, we're going to be taking a look at the Bitcoin price chart, the total altcoin market cap. We'll peek around over there at the altcoins to see what's going on in the cryptocurrency market. I just got back from a 3-day weekend. It was a holiday weekend here in the United States, the 4th of July, Independence Day. I had family over. They stayed until yesterday evening and they finally left. I don't want to say it like that. It's a good thing. I enjoy it when my family does come over. But of course, like everybody, you're excited to have your family. And then at the end, you're tired because it was a huge weekend. And it felt good to just kind of sleep and watch some Netflix yesterday afternoon, yesterday evening. But now it's time to get back into the swing of things with the cryptocurrency market and talk about what happened throughout the weekend. I did keep an eye on it on my phone throughout the weekend. I saw we had several days that were green. Yesterday was red. And this market has just really been crawling along. Taking a look over here at the total altcoin market cap. If we zoomed in on what the last 14 candle closes have been, 11 out of the last 14 days have been green, but it just hasn't felt like that because the greens just keep on gradually going very, very slowly. And then when a red shows up, whack. And then not only that, right? I've been talking about this in my YouTube videos. I talked about this over there on Twitter, that for the most part, even though those days are green, almost the entire day is spent in red. And then it's not until like the last hour, the last 2 hours that finally the market flips green, closes the day green, and then we start a new day and we're back in red all day. So even though the days were green those days, it didn't feel like that because the market was red during the whole duration of the entire day until the very, very end. But as I've been talking about over the last several weeks, I'm optimistic for this market that we're holding this price level down here for the total altcoin market cap and the total market cap, the bull flag double tap back test on top of the all-time high previously, that this is a normal structure in here. But one of the things that we were looking at over the last several weeks was, hey, has there been any type of leaders? And that was the thing that was really kind of not looking so great, is that we didn't have anybody really leading the way, saying that the market was going to be reversing. And that's things that I look for in this market, whether you tune in just to watch for XRP content or you're looking for Bitcoin content or whatever you're looking for. You'll notice that I pop around a lot because if the market's going to go in one direction or if it's going to reverse back to a different direction, usually we find some type of leaders in the market that tell us a story that that's what's coming. And during a lot of this time period down in here, we just didn't have any of that happening when we were back here in late June 22nd, 23rd. We just didn't have any leaders telling us a story. But then along came Compound. And when we talked about Compound, it was right back in here, right when it was breaking through this price level. This was that June 21st, 22nd fall that happened. It stayed down here. And then Compound started leading the way. And it was like, all right, wait a minute. We might finally have one that is starting to show us which direction we're going in. And then the rest of the market did follow suit over the next day or two to go higher. But I wanted to point to Compound once again to show that Compound is still continuing to climb up and is still leading the way in this market. And it's now taken out these price levels over here, May 26th and May 27th, which for the total altcoin market cap is way back over here at about $1 trillion. We were talking about that number last week. For the total market cap, that's right back up in here at about 1.7, 1.8 trillion. But as we start out this week, as Bitcoin's looking all sad way down here, and the altcoin market hasn't made any clear breakout yet, I wanted to show that it's not just Compound now that's starting to lead the way. We're starting to see other coins follow suit, such as Band, Maker, Ethereum holding its own, like we talked about with Ethereum Classic. Rep gave a very big pop to the upside, getting back up to those levels, and Atom is up there as well. But Compound was our first one that we noticed starting to lead the way. When you see your first one, it's kind of questionable, like, all right, is it just an anomaly? But then things did start to follow along with Compound, and I wanted to point to you and show it is still continuing to go, and it's getting significantly higher. Cardano is also one of the ones we did talk about last week with the news that came in for them being added to Grayscale's large cap fund. Cardano did break out from that price level throughout the weekend, so still seeing some positive price action with consolidation. But really, a lot of what's happening in this market reminds me of what's happened with XRP, and we can see it in here. And this is like when we had the sell-off back from C19, big massive pull down, and then it just kind of hovers flat down in here. I'm not saying it's going to grow at this grueling grinding rate for as many months as XRP did back then. I think this was like 6 months or not 6 months, but like 7 or 8 months of just an absolute gruel here. I don't think we're going to see that here. But we saw the same thing happen back in here, right? You have your first initial crash, and then you have your one further dip, and then just this kind of grueling consolidation that happened down in here, just like we're seeing happening over here and throughout the rest of the market. And I think this thing eventually is going to do exactly just like what we've seen all happen back over in here, right? Like what we're seeing happening over there in Compound. But I think it's important just to kind of take it back. What did the previous bottoms look like when they happened? That's what they looked like, right? That's what that one looked like as well, right? So this is not out of the norm for what the bottoms look like. It's exactly like what the last two did as well. But usually the news just kind of keeps coming at you. Like back in here for XRP during this time period, Grayscale dumped all of their XRP down in here. I mean, you just had terrible news after terrible news. You had SEC lawsuit, then you had Coinbase halting the trading of XRP, and then you had Grayscale saying, you know what, we're closing out our XRP fund. We've sold all of our XRP down in here. So you had lawsuit, loss of exchanges, loss of institutions. But that was the bottom. But when the bottom came in, you can kind of see what it looked like on the daily time frame, what it looked like on the daily time frame after C19. And yeah, it's still kind of grinding, but we have some leaders showing us the way, and structurally it all looks good. We're just kind of waiting for that opportunity to finally pull our way back on out of here. The most likely area looks like a backup there near about $1. But I'm right there with you that this thing's taken a while, right? And sometimes we just have to kind of put things into perspective on what has the market done recently. So if we look at, the total altcoin market cap for the last 15 days, the prices have risen by 33%. If you took another 15 days and you rised it by another 32%, where do you get, right? Then you do the same thing again for another 15 days and you go up 32%. At that rate that we are growing at right now, which seems grueling, if you kept going at that exact same rate, in 30 days you'd be back to the all-time high. I'm not saying that's going to happen, but it's just a way to put things into perspective. The thing is, we all kind of feel the emotions of what has happened with the prices falling down so drastically and then it not feeling like it's recovering very quickly. But when you kind of look at it from a percentage growth versus time, 33% over the course of 15 days. If you did that slow, grueling grind and continued to grind at that grueling pace for 30 more days at that same rate, you'd be back to the all-time high. But we've kind of been bouncing around a lot in this video. I just wanted to kind of show you the things that happened throughout the weekend and the things that I'm seeing in the market right now. But I figured we could talk a little bit about what it's going to be like as we start moving forward. So my expectations are that the market's going to be recovering, and it can kind of give you an insight into what my mind is going to be like when that starts happening, so long as it does start happening. And for the people who are new to cryptocurrency and understanding how it works, I'm optimistic down here. I'm optimistic that we're going to recover, but then we're going to start getting back up into retracement areas. So I'm going to start drawing things out and start saying, here we go. These are the big critical levels. And you're going to start seeing me saying, look, this is where all the danger resides. When it comes to day traders, when it comes to big money, when they're going to hedge their position, hedge what they're doing, if they're long in this market, they're either going to protect themselves right there, they're going to sell up in that area to hedge themselves, or we're going to see people exit this market completely. The people who are professionals and know that you have to be patient in this market and wait for the market to retrace, that's going to be the big critical level to watch out for, is when that altcoin market starts getting back up into that $1.2 trillion level. And so that's why you don't really hear a lot of worry out of me right now. When the prices are really low and we're like this, you're not going to hear a lot of worry out of me. But when the prices start getting back up, and that's going to be the next phase that we're going to start going into, is that we're going to start going into that retracement phase of this market where it starts really grinding back up in there. A whole lot of story gets told up in there. Is this market going to keep going? Is it going to break through? Are we going to go to much higher prices? Or is this an area where protections are going to have to be taken, put into effect? Because what typically happens with retail investors is they will stay very scared down here at the bottom and they won't buy anything when the prices are low. But as the prices start retracing back into that level, all the optimism returns, all the excitement returns, the euphoria returns. But this is that big critical area that has to get broken through. If there's going to be a resistance, to me, that's the most likely area of where it's going to happen at. Somewhere between a 0.618 and a 0.786 Fibonacci retracement. And so as we're heading into this next phase, that's going to be the big area to look out for. And the problem is, for a lot of retail investors who are just too scared to touch the bottom, they're going to watch it come all the way up here, and the whole market's going to grow by 54% to get all the way back up there. Huge rise in the market. But it's not until after the rise has already occurred that a lot of people will finally start to become bullish. But then, of course, my tune will change, and it'll be the opposite of what their tune is, right? Just like at the bottom, they're all screaming, just admit we're going into a bear market. As we get back up in there, you're a dingus. You don't know what you're talking about. This market's going to break up higher. But it's really just figuring this out and keeping your mind in that type of mindset that, like, look, okay, if this market is crashing, there's things that are going to most likely happen. A big fall will happen, and then a retrace back into the retracement levels. And then whatever happens in those retracement levels really tells the story. Can it get through these particular retracement levels, or does it get massively rejected by them? If the altcoin market were to get back into that price region, that $1.2 trillion price region, and then go break into new lows from where we're at right now, go break below $595 billion, there you go. I'm in it. I'm in the camp that we're in a bear market as well. And so that level is going to tell a really big story, and that's the big anticipation moment of what's coming up next. I'm not too worried of some huge bear market starting from where we're at right now. For me, the big moment's going to be this market's going to rise significantly here pretty soon, and then we'll get our story told. Now, I've been showing you guys the total market cap, showing you how precise the hit was on the 4.236 extension based on the rally prior to capitulating. Everything about this tells me we're going to go off and set highs. I'm still in that camp, still in that belief. As we get back to those retracement levels, I'm still going to be in that belief with that expectation. But we have to always keep an eye on that and say, look, there's still this, right? If it doesn't get through these areas right in here, then that's wrong. And if it does get through these areas right in here, well, that's when we start posting rocket ships, live streams, good times, everybody's happy. But the signature things that happen in these retracements that end up have always led to bear markets continuing is this mindset of return to normal, right? And you hear about that all the time when bubbles pop. Return to normal, the return to normal retrace. So market has a big crash and then it recovers and then everybody's buying it, extremely excited and extremely happy, thinking it's going to go up. But we were just talking a minute ago about, hey, look, if we continued at this grueling grinding pace of 33% every 15 days, we'd gradually get up there. The mindset of people probably wouldn't change. It'd still be bearish, still be pessimistic. Reaching back to that retracement level with still a pessimistic retail market mindset is actually positive. And that sounds crazy, but it's when it's the return to normal phase and all the retail investors are all euphoric again, that's typically where they get wrong-footed a second time. So as we head back to the retracement levels, the more people that are still bearish in this market, the better of a sign it is that it's not going to actually get rejected there. It's typically when people are really excited, really euphoric, and are fully convinced that this market is returning back to all-time highs is when the market will actually reverse. And that's one of the reasons that is I've also looked at this from a psychological standpoint of how retail investors are behaving to believe that the top of the market is not in yet. I remember when the bubble popped in 2017, the big crash happened, people didn't just immediately leave. There was that exact phenomena that happened. People buy the dip, buy the dip. We've seen this happen too many times. Buy the dip. Retail investors don't know that right now. Retail investors are just scared. And I've been thinking to myself, what lesson are retail investors learning right now? Right now, if this market breaks out into new all-time highs, what are they learning? They're learning that they should have bought the dip, right? How scared did I get last time? What should I have done last time? Last time I actually sold when the prices were down. I should have actually just bought the dip. So here we are again. There's this big crash. What do I do this time? I buy the dip, right? They haven't learned that lesson. They're learning that lesson right now. But when the next dip comes and they think that it's returning to normal is a time that it doesn't return to normal. So I know I just went into a psychological kind of thing there. I don't know if I even brought anybody along with me, if I lost my whole audience while I was talking about that. But the reality is retail investors are incredibly scared right here. And when bubbles pop and we return to normal, you usually hear a lot of buy the dip. It's going to keep going. They don't believe that the bull market is going to end. But we know for a fact that most retail investors think the bear market has begun. That's a good sign. So the more bearish retail investors are as we approach back to the retrace levels, the better it is. The less likely it looks like one of those return to normal phases where it was just a buy the dip opportunity. It was crazy. We're going. The more bearish people are as we get back to those retracement levels, the better it is. But I thought I would just kind of warm you up because that's where I'm looking for us to go, right? That's where my anticipations are for this market is that our next phase is going to be going back up towards those retracement levels. And when I get there, I don't want you being shocked saying, well, why are we talking about this at this point? Because now I'm wanting to buy this market. I didn't buy it down here. I'm wanting to buy it now. But this is my mindset, right? If I'm making any entries in this market, I'm already, I'm done, right? I always say I buy into fear, buy into panic, buy into pessimism. That's when I like to make any type of entries. Then when the market starts getting excited, boom, fingers are off the buy button, not doing any more buying. Everything is going to be focused on this box right in here. And that's my anticipation of where we're heading to next, is that we go into the retracement phase of this market. And that's where it's just going to be, we got to see what happens. Get through that thing, all sunshine and rainbows, clear skies ahead. Let's keep on rocking. But when markets do reverse, when markets are in a downtrend, they don't go in a straight line down. They go in waves. Just like we make waves to go on our way up, we make waves on our way down. And the top of waves in downtrends will begin right there. That's where you'll get your first lower high. If the market is going to reverse and we are doing something that looks like this, right? You have one wave, then you come up for a wave, and then you have another wave, then you have another wave. That's how they'll happen. They'll go right into retracement levels and then keep on going. So everything, all the marbles are being bet on that spot right there. And so as we get there, you're going to hear those warnings out of me. You're not hearing warnings out of me down here at these lower prices because I'm not scared of these lower prices. I'm optimistic at the lower prices. I get more bullish at lower prices because what's the most likely thing to do when a market is oversold, beaten down with bullish divergences, is that the market's going to go up, right? But as we get to the retracements, then come the warnings. But the thing is, retail investors will stay in fear as long as those prices are lower and they don't let their guard down until we finally get back to the retracement levels. But you can see how these things work. Anybody who's been with this channel for a couple of months, seen me talk about this kind of stuff before. You've seen me prove it happen on these charts before. We even showed Bitcoin back in February how it was doing precisely that when it was happening, that Bitcoin was having a big fall, going back to the 702 retracement, and then going down further again. And then as it retraced back on that fall, so it started its fall right here, retraced again, once again, it went right back to the 702 retracement and then fell once again. And there's a very legitimate reason on why the intro of this YouTube channel shows my character breaking through the 702 Fibonacci retracement level and going to the moon. And it's because that price level is a very historical resistance level in the cryptocurrency markets. That 702 retracements can either punish you or provide rewards. And when you get through them and go to the upside, it's usually clear skies ahead. Otherwise, things start getting pretty sketchy. XRP has several really good examples of that. Even right here back in February, March, and April, we can see how this level really held it down. And finally, once it got a clear break through the 702, prices just kept going way up. Similarly to XRP, back in August, September, October, and November, we can see the retracement that came in right in here, gets back up, battles against the 786, 702, 618, bounces around in here for a while. Once it got through the retracement levels, boom, off it went. Same thing for Bitcoin as a time period we keep pointing back to, right? August, September, and October, the last time we had the ABC correction in which it retraced back to the 702, went off to do a C leg, which, if we take a look over at what's happening right here, right now, this is the same thing that we just had happen right in here, right? Retraces back to 702, goes off to do a C leg. But back there in August, September, October, and November, you could see what happened once again. You could see here's all the retracements coming in. Here you can see it knock into the 702, and then it's once it broke through that 702 and was able to clear through the retracement levels, what happened with the market? It was able to keep on going. But this level right in here dictates everything, and I just showed you how 702 reacted there. I just showed you how 702 reacted in here. I showed you how it reacted twice back in here. And I just showed you how it worked positively for the breakouts for here on Bitcoin and for XRP. But for the other side of the coin, for Bitcoin, when the bubble popped back in 2017, we could see the retracement happening right here as well. Right back to 702, off into bear market we went. So, prices fall dramatically, scary, terrifying, right? Everybody's scared. But it's once we got back into this price level right in here, retail investors became all excited all over again, thinking, you know what? That was just the opportunity to get back in. We're going to start surging at this point. So while we're way down here below the 0.236 Fibonacci retracement, I'm excited, optimistic, upbeat, keep beating the drum. Things are looking okay, but it's all about getting through here and keep it on going. But like I say, I still believe that this market is going to break out into new all-time highs because of the structures that we have over here in the market cap. So the total altcoin market cap breaking into the new all-time high, coming back to back test this bull flag area on top of the test on the all-time high. That's very normal in what we see happen with markets after they go on and then they continue to set new highs. So I'm optimistic and in the belief set that we will set these new all-time highs. The issue is, from what I've learned in my experiences, is I have to make up my mind right here and right now. Either I have to decide I'm bullish or I'm bearish right here, right now. Because the next phase of the market that comes in situations like this becomes the retrace. And there's no time for me to sit there and think about buying anything into the retrace for me personally. For me, the decision has to come, am I going to hold on and keep riding up, or am I going to sell into the retrace? But buying in that retracement is never an option for me, ever. So the decision has to be made right here, right now for me. Am I bearish on the market, and will I be selling into the retrace? Or am I bullish on the market right now? If I'm bullish on the market right now, then, I need to be buying if I have any money left for me to put into the market. I can't wait for the prices to get up in here and then decide that I'm going to be bullish and that I need to put my money into the market, because what will have happened at that point? The market will have already risen 90, 95, 100% at that point. I can't make that decision just because the prices have already started rising. Because then we're in all the dangerous stuff, right? We're in that, and now we're in that retracement level, right? So I'm going to buy it anticipating that it is actually going to break through it, but I don't know yet, right? So that's why you're not going to see, you're just going to see the consistent messaging out of me, right? I'm bullish. I think this market's going to go to the upside, and I'm telling you, I'm going to be concerned once we start getting to the retracement levels, because I know what happens in retracement levels. Either we break through them and things get really exciting, or as I showed multiple examples right now, they can get rejected at them. But with the retail mindset, what happens is they stay bearish when the prices are low, and as they get back to the retracement levels, they become bullish and excited all over again. And that's just the opposite of how things have to work based on the math, right? The percentages have already happened, right? When we get back to that price level, the market's already risen 95% at that point. All the opportunity on the retracement is now gone, but people are super excited, and it's a cascading effect, right? So what happens? The prices rise, so people are excited, people are posting it on Twitter, you start seeing lots of bullish YouTube videos, and there's just excitement and buzz everywhere, and that feeds into emotions, and that creates FOMO. But that's also what happens at tops, right? So I'm just trying to give you a window view, a look inside to what happens in my brain and how I look at these things. Is that when the prices are low, you hear me excited, even though I know the market's down, the market's beat up emotionally and everything like that. I'm excited because I'm like, look, the prices are going to rise. What's going to happen at the retracement levels? We're all going to find out. All my analysis, my mindset, my conviction is that the market will break up higher. But so long as we're far enough away from that retracement level, and we're not even at the retracement level, I could sit here and just be bullish all day, because I think we're going to the retracement level no matter what. If the market is a complete bear market, if this is the most bearish market that you've ever seen in your entire life, well, the time to be bearish is way up in here, right? After the market has still quite a bit more rising to do. But all my experiences in this market tell me and show me, and I know that retail investors and the euphoria comes back at those prices. And that's the place where the wrong footing can happen the second time. And there's going to be a lot of people who are stuck in this very specific situation. Here's what will have happened to them. A lot of people in this market, right? They will have bought up in here, they will have sold down in here, and then now the prices will all be right here, and they won't know what to do. What do I do? Do I buy? Do I sell? Do I walk away? I don't know what to do, because you see the situation that they get put in at that point. If they bought the top and then they sold the bottom, and then they want to get back in because all the excitement has returned, look at the area where they're wanting to buy back in at. Right back at the retracement level where you don't really know what's going to happen at that exact moment. So I have no problem sitting here being super mega bullish down here while these prices are suppressed and the market is oversold with bullish divergences right now. I'm excited. Things are going to get exciting. That's what my mindset is at. But then we go into the phase of the retracement, and all the people who've been with me for a long time and we've gone on this journey together know that that's what I do when we get back in here, is I start putting on the caution signals. But when we get through those areas, this is why I get so excited. This is why we have live streams during those time periods. This is why I hoot and holler, and it's such a big deal to me, and I get so excited. It's because of all the things I just showed you and the reactions that can happen there. Either we have this big major rejection that happens that comes in at that price level, or the prices just go absolutely sky high afterwards. And I just showed you multiple examples of it happening in both ways, right? So with where the market's at right now, I'm not sitting here in big fear. I'm saying we're going to be heading back to those retracements. And then that's where the story gets told. And history shows that this price level does get taken out and this market does set new all-time highs because we've been talking about this specific setup with these Fibonacci's, which is what we're talking about in a lot of this video, right? Fibonacci's. We know that these levels are important in the cryptocurrency market and that the market does gravitate to them. In all these examples that we've looked at, this is what happens. The market still goes on to break to new all-time highs. But as we head there, there's going to be areas of interest. There's going to be resistance levels as we get there. And we know that usually it's going to be up here between the 618 and the 786. And historically, we've seen it way too many times. Right there, dead in the middle of those two Fibonacci retracements is a 702. And that tends to be the big knockback. However, when that 702 gets cleared, just like the character in the intro of this video I showed you, it tends to go to the moon. So as we head into this next phase of the market, as I expect that the prices are going to rise, right? That's just me. That's my personal biased opinion, not financial advice. That's what we're going to be looking at. And I wanted to just kind of lay this groundwork right now because I know what will happen. Once these prices start getting back up to that retracement level, a lot of people are going to start asking the question, which I never ever answer, is they're going to say, should I buy? I never answer that question. I never tell you to sell. I never tell you to buy. But there's time periods where you see that question get asked more frequently. It hasn't been asked in like a month with the prices lower, but it's when the prices get higher, it gets asked all the time. And that's because of the situation that they get put in, right? FOMO at the top, fear and panic at the bottom, and then the FOMO starts to return. And I'm just trying to show you how my mindset works. For me personally, down here, these lower prices, it's not a time for me to be panicked and worried. The time for me to be concerned is once we get back to the retracement levels, and then the time for me to actually be excited, euphorically excited, is once the Fibonacci retracement level even clears. Even before it breaks through the all-time high, you start seeing me get super ridiculously excited just because we've watched it and I just showed you so many examples of what happens at 702. And if we can clear through it, and if we can clear through the 786 retracement level, that's a really good sign. So there we go. I'll start wrapping this thing up. Ridiculously long video to start off the week. I wasn't here yesterday, so I guess I don't know. We'll have a really long video today. Started off a little all over the place, but it looks like we kind of find our groove halfway through. I guess that's what happens when you have a 3-day weekend. But there you go. I hope you got a good look into what my mindset is at right now, why I'm bullish right now, why I'm not too worried right now. I really am, and people who have gone on this journey, we've all gone on it together, know that that's really what my mind is always about. I'm always focused on the Fibonacci retracement and the Fibonacci extensions. And just because fear and panic and everything gets super high doesn't take my eye off of the, you know what, those are the things that have always historically mattered. I'm sticking straight to that. But I'll wrap this thing up. You guys, of course, can check out my website. This is bcbacker.com. This is my course where I teach a lot of the stuff that we just talked about, talking about Fibonacci extensions. I talk about my personal exit plans in here. We're talking a lot about that 4.236 extension based on the rally prior to capitulating, how I've laid out a lot of my personal exit plans. I talk about what happened in the previous Bitcoin bull runs and the different altcoin market cycles, the timing of when those alt seasons showed up within Bitcoin bull runs. Talk about mathematics and percentages, and I teach you how to set up your own charts and your own indicators within TradingView and CoinTrader Pro. I did include a recent market recap right down here, right at the end of the month, June 30th. That's available to anybody who's already enrolled in the course and anybody who does enroll in the course. And you can check all of that out over here on bcbacker.com. You can follow me over here on Twitter at bcbacker. And I want to thank you guys so much for watching my channel. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.